He completed MBA in finance from He completed MBA in finance from Seventh-day Adventist College. After completing MBA in 2006, he joined Concept Investment Private Limited, Surat. He has been managing SEBI approved PMS since 2009 and designated as fund manager. He is working on two plans, Legend Large Capital Equity and Marvel Mid Capital Equity for over 12 years, which provides 14% CAGR and 12% CAGR respectively. He is passionate for equities and invests all his savings into it. Now, without any further ado, I request Mr. Siddharth Mandalaywala sir to share his knowledge with us. Thank you.
Yeah, thank you, Isha. Thank you, Dilnaz ma'am, for inviting me. I think this year would be probably seventh year, if I'm not wrong. So, with Luthra, it has been a long association. Also, I would like to thank Jimmy sir for inviting me every time. So, without any delay of time, I will share my presentation. So, I think someone has to give me rights here. Okay, so is the screen visible?
Yes, sir.
Okay, fine.
Yes, sir.
Huh. So today the topic which has been given to me is art of portfolio management. So here I will be discussing about broadly three aspects which are very important for you all to know. The first one being how to construct a portfolio. Second being how to select a security, how to select a stock. So we will deep dive into that also. And third thing, which is the current topic and which is very relevant now, is investing in new age businesses. So recently you must have seen the IPOs of Nika. Most ladies would be using its product, its app. Similarly, Zomato, again, most of us are using it. So these are the two famous IPOs which came recently. So we will be talking on that how to value them, how to see them. And so these are the three broad aspects which we will cover in this presentation. And I think the presentation would be around 40-45 minutes. And after that, we will take up question answers. Okay, so first of all, see, I have been in this market for last 15 years now. I joined Concept in 2006, and from 2009, I have been managing public money. So it has been 12 plus years now, and the investment philosophy has evolved over this period of time. So first thing which we all need to learn is we need to evolve ourselves. If we learn something today, it can become absolute obsolete also. So that also we need to take into consideration, and we need to change with time. So my investment philosophy has also changed. It has also evolved over a period of time. So these are the five broad aspects which I look at. Before going into the presentation, is everybody able to watch the screen, and is everybody following my voice?
Yes, sir.
Yes, sir.
Yes, sir.
Fine, very good. So the first important thing which I look at while selecting any stock is external opportunity. The opportunity should be huge. It should be humongous. So I will give you two broad examples of this. One sector, which is a very small sector in India, example is of welding sector. So total sales of welding sector is around 2000 crore per annum in India. On the other side, jewelry industry, it is the very large industry. So last year the sales was around 5 lakh crore. So on one side we have jewelry sector which has a sales of 5 lakh crore, and on the other side we have a sector which is welding, just 2000 crore of sales. So I will always go for a sector which is huge, which is big, so that my company can also become big. So this is the first important point which we all need to learn, to that the sectors should be huge. So even if you look today in our Nifty or Sensex companies, the companies which are big, all the companies have become big because of the sector in which they are in. So for example, Hindustan Unilever, for example, Reliance Industries, for example, ICICI Bank, HDFC Bank, or Infosys, TCS. These all companies have become big because the sector was big and the opportunity was big. So this is the first important point which we need to look at. A recent IPO of Nykaa came. The opportunity size for beauty products as well as fashion products is almost 10 lakh crore in India. 10 lakh crore is a big opportunity for Nykaa to tap. So this is what we look at, external opportunity, how we look at. Then comes business. So after getting into the external opportunity, we need to focus on the business. And business should have two things which are very important in investing. The first being return on capital employed. Return on capital employed, generally we prefer our companies to be above 15%. So today in India, there are around 5,500 and 500 stocks listed on NSE and BSE both. Out of that, if you just take one criteria that the return on capital employed should be above 15%, then 93% of the companies will get eliminated. So your universe will only be 7%. Why return on capital employed is very important? Because today in India, the cost of capital, cost of doing business is around 10-11%. So if your company is not able to generate high return on capital employed, then you are not making any free cash flows. So what is the definition of free cash flow? Return on capital employed minus cost of capital is equal to free cash flow. So if my company is generating 20% ROCE, and cost of capital is 10%, so my free cash flow is 10%, and this 10% is again being deployed into my business, which is again going to generate me 20% ROC. So if you are able to identify such companies, then that company can become really big and that company can generate very high returns. I will give you one example, and you all are aware of that company. The company is DMart, Avenue Supermart, right? So Avenue Supermart currently, the ROCE is around 20% and growth is around 25%. So what happens that they are generating around 10 to 11% of free cash flow every year, and that free cash flow is deployed in expansion of their stores. So today they are more concentrated on western and eastern side, and they are less concentrated on northern and southern side. So what they are doing, they are trying to expand over there. So with this free cash flow, they are expanding. Today they have around 250 stores in India. If I give you an example, Walmart has around 4,400 stores in US, and population of US is around 30-35 crores, and India's population is 130 crore. So you can see the potential, how big DMart company can become, right? And the IPO came at around 300 rupees. Today, anybody knows what is the stock price of DMart? Anybody? You- Nobody is tracking stock market.
46,000 something.
Around 3500.
Hello. I was not able to hear properly.
46,000 something, sir.
No. Stock price. Stock price of DMart is around
4600. Sorry, 4600. Sorry.
4,600. Correct. Right. Okay, fine. So, see, from 300, it has risen to 4,600. So, a big wealth creation has happened in around 3 or 4 years. Then comes management. So, after you have analyzed external opportunity and a good business which is growing as well as having high return on capital employed, then you need to come to management. Again, see, there are many examples where businesses are not able to generate high ROCE. For example, aviation sector, if you see, most of the companies are have their ROCE below 10%. Similarly for telecom business, so Bharti Airtel had ROCE of around 8-9% for many years now maybe because of price increase they can increase their ROCE, but for last 10 years it was not doing well. So this is what we need to see. Now coming to management. See, in management, 2-3 things are very important. One thing is good capital allocation strategy. So once a business is generating free cash flows, what the management is doing from this free cash flow is very important. So as I said, in DMart, they are not giving it to us as shareholders through dividends or through buybacks. They are expanding by more and more stores. So this is a good strategy. The other bad strategy could be they diversify into something which is unrelated to them, which they don't know, which they don't have any expertise on. So this type of allocation, if they do, then as a shareholder, I would not be happy. But if they are expanding into the domain which they are expert in, then as a shareholder, I am very happy. So we have to see that the company's management, what they are doing with the capital, with the free cash flow which they are generating. Again, one more example I will like to give. It is for Infosys and TCS. So now Infosys and TCS business is more of a mature business, and they don't need any capital in their business to deploy. So what they do of the free cash flow which they generate, they do two things. They buy back the shares and they give it out as dividends. So again, this is a good strategy, because if they put that cash in fixed deposits, they will earn around 3-4% post tax. But if they give it to us as a shareholder, we have better avenues to invest in. We can invest in good companies, right? And we can generate high ROCE out of that money. So from companies like Infosys and TCS, I will like that they give up the dividends, they do the buybacks, and that will help them to generate more EPS, earning per share. So this is what management needs to do. The other thing is management should be, of course, competent, and most important thing for management is to be having trustworthy track record. Integrity is a must. So as we all know, 100 multiplied by 0 is 0. So if you are very competent, if you are doing very good justice with your capital, but if you are not trustworthy, then your reputation is 0, and finally you will not make money for your shareholders. So 100 multiplied by 0 is 0. This you should remember in terms of integrity. So management's integrity is a must when you invest in any of the company. And there are many, again, examples like Satyam, Xerox. There are many examples where management was not trustworthy, and finally shareholders lost most of their money in these companies. So these are the three aspects which we need to look at. And finally, it comes down to valuation. So if my company is good, the external opportunity is huge, there is a huge runway to grow that business, management is also excellent, but if it is available at exorbitant valuation, so if somebody is asking Salman Khan for a movie, and Salman Khan quotes that please give me 200 crore for a film, then one should not pay Salman Khan even 200 crore, because this is not viable. So valuation is also important. You can overpay a bit, but you can't overstretch. You can't give exorbitant valuation to any company and if it is there, then it is like a bubble. So in 99 2000, what happened with most IT stocks, that every stock went up 50x 100x, and after that they came down. Even Infosys at that time came down by 80%. And to recapture that high, it took 8 years for Infosys. So a high which was made in year 2000, the same high was recaptured in 2008-9. So 8-9 years there was zero return for any shareholder if somebody had invested at that high valuation. So these are the four aspects which we need to look when we buy any company, when we buy any scripts. And the most important thing is the fifth point, that after doing all your due diligence, after doing everything, once you are convinced that this company is good, then you need to buy it and hold it. Because see, money is not made in buying and selling. Money is made by holding that company. So a person who has been holding Infosys for last 30 years, he has made tons of money. Similarly, a person who has held Titan for last 50 years has made good money, very good money. The CAGR is around 26-27%. So this is very important, that the holding time, the period of holding is very important. And in between, there will be many hiccups. Like in between, there was COVID. In India, we have seen wars, Kargil war and other wars. We have seen famine. We have seen floods. We have seen 2008 world financial crisis, biggest world financial crisis. And even after that, Sensex has went up from 100 rupees to today 56, 57,000, right? So ultimately, market will go up when there is earning growth, when there is high return on capital employed, and if a business has a longevity and a big external opportunity. But in between, there will be many hiccups. For example, currently market is going through a correction. Market went up to around 61,000, and now it is down to 57,000. So this type of things will happen. But we need to hold during this tough times. So this is the first aspect which I was talking about. These are some of the examples of external opportunity. So HDFC Bank, TCS, we already discussed. In this slide also, if you see what we look at, some of the important aspects is quality growth. See, there can be growth, but growth can be of two types, good growth and bad growth. So we need to go and chase good growth. Again, I will give you one example, that certain companies only focus on earning per share, that is booked profits, and they will never focus on real profits, that is real cash flows. So again, we will not go for companies which are just good at showing profits and not good at free cash flows. So this is again a very important aspect to look at. Even we need to look at receivable. That, for example, some company has receivable days of 90 and some companies has receivable days of 30, and both are operating in similar sector. So why there is a discrepancy between these two? Why one company is having 30 days and one company is having 90 days? So we need to dig down and search the reason behind that. So these are all the reasons behind good growth and bad growth. Again, the important thing here which we look is return on capital employed should be greater than sales growth, and sales growth should be greater than cost of capital. See, why return on capital employed is very important in long term. So here I have taken a very beautiful example. This is of a company for a 40-year horizon. So if a company A is growing at 20% and company B is growing at 10%, and if I buy company A slightly expensive at 4 times book value, and I buy company B at lower price, that is 2 times book value, so I'm buying it cheap. At the end, after 40 years, I will sell company A at 2 times book value. So I bought it expensive and I'm selling it cheap. And company B, I bought it at 2 times, which is cheap, and sold it at 4 times book value, that is expensive. See the result in the last column, that company A still will generate 18% CAGR return, CAGR return, and company B will generate only 12% CAGR return. So in long term, ROCE is more important than what valuation you pay. So as I said in my earlier slide, that you can pay a bit more for a good quality company. If a company is good, then you can pay a bit higher price. So for example, in last 10 years, Titan has always quoted above 30 PE multiple and still generated very good returns for its shareholders. Similarly, Infosys always got higher multiple than Satyam, and we know the result what happened. So good quality will come at a price, and we can pay somewhat bit higher price for that good company. So this is the example for moats, that some companies which are very successful, they have the competitive advantage. So moat is nothing but competitive advantage. So some of the moats here I have highlighted is Hindustan Unilever or Nestle. They have a very good distribution network. So if you go to any mountains, you will find Maggi product, right? So Nestle is there even in the remote places too. Similarly, low cost distributor. We have one company in our portfolio, that is Relaxo Footwear. uh, it is a very low cost producer in flip flops. So you must be aware about the brands of Relaxo like Sparks, Flight, Bahamas, the advertisements which come with Salman Khan, Katrina Kaif, Ranbir Singh. So this business, what they do is they are generating high ROCE, 25%. They are growing at 25%, and the free cash flow which they generate, they again deploy it in expansion of their factories. So recently they again expanded their factory, and they said that they will be producing more 15 lakh flip flops per day now. So this is a very good strategy. So they have become a very big company now. Their market capitalization is even bigger than Bata, which we all know, right? So this is one moat which they have. The other thing is high entry barriers. So the companies which are mentioned here are, one is cigarette company ITC, and other one is liquor company United Spirits. So again, if somebody has enough money today, he will not be able to open a cigarette company or a liquor company. Government will not give them license. So government has given license to few companies, and now only these few companies will enjoy the profit pools. So this company, these two companies will do very well in long term, provided the high entry barrier remains. And one more moat is brand recall. Royal Enfield. You must have, mostly the boys must have enjoyed Bullet, right? So Bullet, what is it? It is a brand. People like to own this type of assets, and they want to ride this type of bikes. So brand recall is very important. So a person who purchases Bullet, he will never come back to Splendor or back to low ticket item bike. He will like to upgrade his bikes, right? So again, Royal Enfield is in 350 plus 350cc plus category. So again, this is a moat for them. These are a few other examples which I would like to share. One is, these are all the pattern recognition which we need to do. So for example, I have seen in Titan company that they have been resilient across multiple cycles. In different cycles, they faced different difficulties. For example, 2016 and there was demonetization. And during demonetization, if you have heard people, they said that now two sectors will do very badly. One is real estate and one is jewelry, because most people buy real estate and jewelry through cash, and cash was completely out of system, right? So it was a big headwind for Titan at that time. But Titan sailed through it and did very well post demonetization. So during demonetization, the price was 300 per share. Today the price is around 2300 rupees. So it has multiplied multifold during this time. Similarly, market likes predictability of growth. So again, companies in insurance business, that is life insurance as well as non-life insurance. See, first of all, India is under penetrated in insurance. So many people don't have insurance as of now, but they will buy as their income rises. Secondly, they are also underinsured in terms of value. So if a person needs a 1.5 crore cover, he has just taken 50 lakh or 30 lakh cover. So he needs to upgrade that also. So again, insurance business has a long runway. What I feel is in next 20 years, these companies can grow at 15-20%, and their ROE is already around 15%. So predictable businesses, this companies fell in predictability of growth. The third thing is adaptability. See, companies need to change with time. So if you are doing something today, if you continue doing that, and if your products are out of flavor, then you will be out of business. So you need to change with time. So we have one company which is Vaibhav Global. This company is into tele shopping. So you must have heard about Naptol type of companies. You must have watched it on TV, right? Similarly, they are selling their products in US and UK through channels like Shop LC, TJC. So what they are doing, they are innovating themselves every time. Currently, their warehouses are not being operated by humans; they are operated by robots. Even they are saying that now TV is a dying industry. So gradually, people will shift to OTT, and cable will go away. And this is what is happening today in my home. Even my mother father have shifted to smart TV, and they are not watching cable TV. So adaptability is very important for a company. Then only they will survive. Other thing is optionality to diversify into related businesses. So here I have given example of Page Industries. Page Industries is nothing but Jockey, the company you must have heard of, right? Inner garment company. So this company was earlier into men's innerwear. Then they pivoted into women's innerwear, swimwear, then kids wear, and now into athleisure. So same company, but now has expanded its opportunity size. So this is very important, and we need to understand this pattern so that we can make money out of it. Again, we like companies which capture market share as well as profit share. So again, the two examples which I have given, Relaxo Footwear, which we discussed earlier, and Dr. Lalpath is into diagnostics. So they are continuously capturing market share as well as profit share. So here I would like to give you one example of Apple smartphone. There are total 1,000 manufacturers of smartphones in the world, and Apple is one of them. Apple's market share is around 15-16%. But do you know the profit share? The profit share of Apple is around 80%. So out of 100 rupees, which has been made by the smartphone companies, 20 goes to 999 players and 80 goes to one player, and that is Apple. And that is why Apple has a market cap today of $2.6 trillion. And you must be aware that Apple's cash reserve is more than market cap of Reliance Industries. So from the cash alone, Apple can purchase full Reliance Industries. Similarly, total profit of India's corporates is smaller than Apple alone profit. So you can imagine how big Apple is, right? Then comes management depth and transition. So see, companies are not here for 5-10 years. They are here for 30, 40, 50 years. So we need to see the depth and transition. Today, Narayan Murthy is not active in Infosys. He was the founder member. But today, he has given the reins to professional people to run Infosys. And they have been doing really very well. So we need to also understand that the culture within the organization should be such that they are able to transmit the power easily, and the company is still not the company does well even after that. Even demerger is one of the area where one can make money. So we identified one company called Crompton Greaves when it got demerged with its parent company, and it made immense money for us because now the focus was only on fans, lightings, geysers, and the products which are of consumer durables. So this is how we need to identify patterns in certain companies. Some other aspects which we like is, we don't like companies where huge capex is required. We like companies where which is asset light model and throws cash immediately. So we go for companies like this. We prefer companies which does organic growth over inorganic growth, because generally what we have seen is inorganic growth generally fails. One statistics is there that 80% of the acquisitions fail worldwide. So when somebody acquires a company, it is very difficult for that company to get turned around, right? Because there are many issues: government issues, labor issues, culture issues. So organic growth is more preferable than inorganic growth. Even we don't like companies which dilutes frequently. So if some company is coming to you frequently to raise capital, we avoid such companies. So Infosys after 1993 has never come to market and asked for any equity or any preference shares. They have only given dividends and done buybacks. So this is the type of companies which we like. Similarly, Titan has never raised any equity after IPO. Once they did a right issue, but after that they never came to the market. So we like such type of companies. We like debt free companies because generally when time is tough, debt will kill you. So even in personal finance, if you are living through loans, then it is the most deadliest thing which you are doing. So don't try to finance your bikes or gadgets or anything through loans when you have no income. If you have some income, then you can obviously do it, but try to reduce your debt. So similar is the thing with companies, that if companies rely on debt, and if situation like COVID comes, and if your office gets locked for 3 months, 6 months, then what you will do? So at that time you have to pay interest, but your income has been zero. So this can be a really very bad scenario for you. So this is why type of debt laden companies we generally don't prefer. So now coming to our second point, which is new age business. So here I have given certain points. Many people are not able to understand how to value this type of companies. For example, Nykaa, Zomato, even some companies will be coming like already came like Paytm. So how to value them? So see, first of all, this is a new economic model versus traditional accounting. Here value is shifting from physical assets to idea and intellect. So this we need to understand. Google and Facebook have zero assets, but they have the biggest market caps. So again, this type of companies are emerging in the world. And I think in next 10 years, 70% of the companies which are coming through IPOs will be new age businesses. So opportunity lies there. The fourth point mentioned over here is e-commerce does not require real estate but requires deliveries. So be it Amazon of the world, Flipkarts of the world, Nykaa of the world, or Zomato of the world, they all require deliveries. They don't require real estate. They just hire some warehouses. India has low cost labor but high real estate prices. So why these companies are benefiting? Because they can get low cost labor. We have seen the guys who have been riding bikes for Zomato, or the delivery boys for Amazon or Nykaa. So we can get them, but if a business is relying high on real estate prices, then they will be not doing that much well. In India, we are at a habit forming stage. So we have just started this exercise, right? So I will give you one example. Today in India, we eat out of our home 4 times per month. This is an average. 4 times per month we eat out of our house. For UK, it is 19 times, and for US, it is 25 times. So people are eating outside of home much more than what we are doing in India. And of course, in India also this is going to change, because now women have also started to work. So if women will work, then more and more eating would be done out. Similarly, these companies are all loss making, right? So Paytm is a loss making, Zomato is a loss making, Flipkart is a loss making. But see, these losses are nothing but investments. So what is happening, that they don't have real hardcore assets. So you cannot depreciate anything, right? What is their asset? They are building clients, they are building happy customers, they are investing on technology, they are investing in brands. So what Zomato is doing? Zomato is investing in their app, Zomato is investing in brand building, and Zomato is investing in their employees. Okay, they don't have any plant or machinery or factories, right? So what happens, that most of the expenses which are being done today is done through P&L, and it is not going through balance sheet. So if I am, for example, in a traditional business, if you are setting up a factory, you can depreciate it for 10-15 years. Barabar. But here, what is happening in case of Zomato or Nykaa, that there is nothing to depreciate. So the day one, the cost which is being incurred is going in P&L, and that is why they are making huge losses, and that is why most of the people are not able to understand that if they are loss making, then why they are getting so much valuation in this market. Today, Zomato is trading at more than 1 lakh crore market cap, even though it is a loss-making company. And even Nykaa is trading at above 1 lakh crore market cap. And again, it is a profit making. Last year, it made around 60 crore of profit. So this is how we need to see. So it is like educating your child. See, if a child is born, it will not start earning from year one, year two, right? It will take its own time. It will go to school, college, then learn some skills, and after that they will start earning. You all must be not earning, right, currently, but after completing your MBA, you will start earning. So till that time, your parents have invested in you. They have invested their hard-earned money behind you, giving you more than 20-25 years to start earning. So similar thing is happening with Zomatos of the world and Nykaas of the world, where current phase is of investing, and after that they will start generating cash flows. Again, see, I am just giving you examples for illustration. This is not a recommendation. So don't go and buy Zomato or buy Nykaa. Do your own analysis, consult your financial advisor, and then only take decisions, right? I am just giving you illustrations. Customer money is more viable than investor money. See, this is most important thing. See, there will be many startups. It is said that out of 100 startups, 99 or 98 startups fail. So there is a strike rate of only 1 or 2% in getting success. So we have seen Zomato and Nykaa being successful, but with them there have been many startups which have failed in the same area, right? So again, this is very important. So what is important is customer giving you the money? Because say investor can give you money if you give very good presentation about your idea, money will flow. Because today people are trying to enter into these startups. So investor presentation, if it gives money, then it is not a good viable thing. But if your product is such, if your business is such that it is generating money out of customers, then it is a good business. So this is the thing which we need to learn while investing in any startups. So be it Nykaa, be it Zomato, you all must be knowing that you are using that product. So you are the customer, and you are, as a customer, you are paying money for this type of products. So what happens initially during when any IPOs come, the main thing which we need to look at is the growth rates. So when Walmart came in 1972, see the growth rates. It was growing at 76%, 59%, 35%. Similarly, Facebook IPO'd in 2012. So again, the growth rates you can see. Google, you can see the growth rates. Amazon, you can see. So this is a good sign for any startups, that if they are growing at a healthy rate and continue to grow, then they will be able to make money at some point of time. Even Indian multi-baggers, if you see Bajaj Finance, Infosys was growing at 60% during 1996-97. Relaxo Footwear in 2008 was growing at 30%. DMart was growing at 39-26%. Today also it is growing at 25%. Zomato is growing almost double, 98% till 2020. So this is a very important thing which we need to look at while investing, that growth should be there. And again, this very important thing, that after buying good business, the only thing to do is to sit quietly and hold that business. These are some of the companies which have done very well. And if we compare it with big players like Relaxo, if we compare it with Nike, right? So you can see here the gross profit margin of Relaxo is higher than Nike. Here you can see gross profit margin. What is it? Relaxo is able to make a product for 43 rupees and it is able to sell it at 100, and that is why it is able to generate 57% gross profit margin. So huge moat is there. That is why they are able to get such high margins. Similarly, return on capital employed is 29% for Relaxo, and for peer it is 20%. Other examples which I have given is of Vaibhav Global and Curate Retail. So again, the leader is Curate. Vaibhav is a small player, but the small player is doing much better than the big player. Big player is losing market share. Small player is gaining market share. See, again, one thing which I have learned during this COVID is good business. Being good is very important for any business. So what happened during COVID is Titan and Page Industries didn't cut any salary of their employees. If they had cut the salary, the earning per share would have gone up, but that would have not gone well with the employees, and the employees would not work tirelessly with this type of companies during good times. So Titan ensured that they will not cut any salary during COVID, and this has helped them now. Similarly, United Spirits have supported bars, pubs, the ecosystem which is around United Spirit, they have supported them. Vaibhav Global, they are giving meals for needy through Akshay Patra, oxygen concentrators they delivered. State Bank of India went to disperse cash during lockdown because most people were not able to come out of their houses. Even HDFC AMC, one of a good company which we own, again, they have a dedicated cancer fund. So this fund which generates any return will go to Tata Cancer Memorial. Some of the changes which happened during pandemic, this is one change, that in Infosys there are more than 2.6 lakh employees working from home, and they generated 1 lakh crore of revenue last year in COVID year. 99% of their employees were sitting at home. So could you imagine before COVID that a company who has employees of 2.6 lakh people, and they were sitting at home and generated 1 lakh crore revenue, and they saved 1563 crore on traveling alone. So big amount was saved during pandemic. Even this pandemic opened many eyes for many companies. Like we had one employee who is working from Bengaluru now. So now geography has become history. So now anybody can work from anywhere, and COVID has helped us to realize this. Titan has been selling 100 crore jewelry every month online. United Spirits has started delivering liquor through home delivery mode. And ICICI Lombard, which is a non-life insurance, is settling claims via video call. So in this new era, the entire world is your market, and mobile is your shop. The company needs to ensure that its app is in your mobile. If its app is in your mobile, then they can penetrate deep into it. I think the time has overshoot, so now I'll end my presentation. Few slides have been left. This is an important slide. See how we construct our portfolio. Generally, we take 20-22 stocks, not more than 30 stocks, not less than 15 stocks. So this is how we construct the portfolio. Maximum weightage is given to any stock is 10%. So we will not go beyond it. This is nothing but to mitigate the risk. We will have 8 to 10 sectors, so well diversified across sectors. We will have IT, we will have new age businesses, we will have FMCG, we will have pharma, we will have banks, we will have insurance. So we will have 8 to 10 sectors, and in any sector also we will not go beyond 30%, again to mitigate risk. So this is how we construct our portfolio. And finally, this is again a very good slide. Most of us know that Bill Gates, Melinda Gates has done a lot of charity, but most of us don't know that Jamshedji Tata, the Tata Sons group, has done maximum charity in the world, and that is to the tune of $102 billion. So immense respect for this group and for this gentleman. And finally, the tribute to Dhoni. If you see the capability or the qualities which he has, you can see in the picture on the left side, he is being very childish, right? He's playing with his kid. And on the other side, when they became champion in World Cup, he stood out of the picture, or you can say he was not standing in the front. So he gave respect to seniors like Sachin Tendulkar, Harbhajan Singh, and all those. Similarly, he is a very clear thinker. So he will take players like Joginder Sharma. Now he is working as a DSP in Haryana government. So in 2007 World Cup, he was given the ball for last over against Pakistan, and we won the World Cup, right? Even in 2011 World Cup, he came ahead of Yuvraj Singh. So he's a very clear thinker, and if he has the conviction, he will do it. Again, here you can see the calmness. The whole Sri Lankan team is worried about what will happen, and Dhoni is sleeping on the ground. Similarly, he's sleeping at the airport during IPL. So even this seems to be luxury for him. And most of us don't know that Infosys and Dhoni were born on the same day, same year. So 7 July 1981 is the birth date of Infosys as well as MS Dhoni, two legends of India. And finally, before ending, we all must hear this clip, and after that we will have question answers.
મિર્ચી મોર્નિંગ. પૈસાદાર હોવું અને શ્રીમંત હોવું, આ બેમાં ફરક શું? પૈસાદાર હોવું અને શ્રીમંત હોવું એમાં તફાવત શું? પૈસાદાર પાસે પૈસો હોય અને શ્રીમંત પાસે લક્ષ્મી હોય. પૈસાદાર બેંક બેલેન્સ થી ધનવાન હોય અને શ્રીમંત બધી જ રીતે સંપત્તિવાન હોય. It is the difference between being rich and being wealthy. Rich એટલે એવી વ્યક્તિ જેની પાસે લક્ઝુરિયસ કાર છે, ફ્લેશી રિસ્ટ વોચ છે, ચાંદીના ગ્લાસમાં પાણી પીવે છે, સોનાની થાળીમાં જમે છે, એમનું ઘર, લાઈફસ્ટાઈલ, ગાડી, કપડા, ઘરેણા બધું એમની અમીરીની ચાડી ખાય છે. એમના સોશિયલ સ્ટેટસ વિશે એક અંદાજ આપે છે. દુનિયાને દેખાડવા માટેની દરેક વસ્તુ અમીર વ્યક્તિ બતાવ કરે છે. એ સતત દેખાડો કરવા માટે, છવાઈ જવા માટે, આંજી દેવા માટે પ્રયત્નશીલ હોય છે. એ જીવે છે એના માટે. પૈસાદાર હોવું, મોભો હોવો, કંઈક હોવાનું ગુમાન હોવું, એ સતત એમને પ્રેરે છે કે આપણે દુનિયાને દેખાડી દઈએ કે મારી પાસે કેટલું બધું છે. વર્ષોથી ભારતીય લગ્નોમાં થતો આડંબર એ દેખાડા વૃત્તિની બાય પ્રોડક્ટ છે. વેકેશનમાં ક્યાં ફરવા જવું, ત્યાં શું પહેરવું, કેવા ફોટા પડાવવા, આ બધું પૈસાદાર માણસનો આડંબર અને ઈગોને સેટિસ્ફાઈ કરે છે. રિચનેસ કમ્સ એટ ધ એક્સપેન્સ ઓફ વેલ્થ. હું તો એવું માનું છું કે જો તમારી અમીરી તમારી ડિસ્પોઝેબલ ઇન્કમના 25% ખાઈ જતી હોય તો તમારે જાગી જવાની જરૂર છે. માન લો કે તમારી પાસે 20 લાખ રૂપિયાની નવી કાર છે. લોકોને એમ લાગે છે કે તમે અમીર છો, પણ તમે તો તમારી કુલ સંપત્તિમાંથી 20 લાખ ગુમાવ્યા છે, ગયા ખાતે. તમે જો એ લોન લઈને કાર ખરીદી છે તો 20 લાખથી ઘણું વધારે ગુમાવજો ને હપ્તા ભરવાનો સ્ટ્રેસ. નવી કારનો આનંદ અને રૂઆબ એ કે લાંબો નથી ટકતો. મહિનો, 2 મહિના, 9 દાડા બધાને અનુભવ હોય જ છે આ વાતનો કે કાર આવે તો 2 મહિનામાં નવી કારનો કેફ, નશો ઉતરી જ જાય છે. હું એમ નથી કહેતો કે કાર ન લેવી, હું વેલ્થની વ્યાખ્યા કરું છું. વેલ્થ એટલે શું? તમે કાર ખરીદી શકો તેમ હો ને જરૂર ન હોય તો ન ખરીદો, એને કહેવાય વેલ્થ. તમારી એક કારની જરૂર હોય અને તમે 4 ખરીદો તો એને કહેવાય મૂર્ખામી. વેલ્થ તો એ બેંક બેલેન્સ છે જે તમારા સિવાય કોઈ જોઈ નથી શકતું. વેલ્થ તમારો એ પરચેસ પાવર છે જે તમારા સિવાય, તમારા સીએ સિવાય કોઈ જાણતું નથી. વેલ્થ એટલે અસલી આઝાદી. બિનજરૂરી વસ્તુ ખરીદવાની તાકાત હોય તોય ન ખરીદવાની આઝાદી. વેલ્થ ઇઝ વોટ યુ ડોન્ટ સી. ક્રિકેટની ભાષામાં કહીએ તો સિક્સર મારતા આવડતી હોય પણ અઘરા બોલને છોડી દેવો, સિક્સ મારવાની લાલચ રાઈટ ટાઈમે જતી કરવી એટલે વેલ્ધી હોવું. ઈચ્છો એટલું ડોનેશન કરી શકો એને કહેવાય ફાઇનાન્શિયલ ફ્રીડમ. વેલ્થ એક સિમ્પલ ક્વેશ્ચનમાં તમને બધા જવાબ મળી જશે. કન્ફ્યુઝ નથી કરતો. જો સિમ્પલ ક્વેશ્ચન છે, આજની તારીખમાં તમે જે કરવા માંગો છો એ કરવાની આઝાદી છે. બધું પડતું મૂકીને કમાવાની ચિંતા કર્યા વગર જે ઈચ્છો એ ગમે ત્યારે કરી શકો છો, તો જ તમે શ્રીમંત છો. બાકી ખાલી પૈસાદાર. બોલો અમીર થવું છે કે શ્રીમંત? યુ આર લિસનિંગ ટુ મિર્ચી. હું છું ધ્વનિત તમારી સાથે. ગુડ મોર્નિંગ માય ડિયર.
So thank you very much.
Thank you so much, sir. Yes, questions, please. Students, please go ahead and ask. Chalo, nobody has got any questions.
ક્વેશ્ચન્સ નહીં હોય એટલે મારે શું સમજવું કે સમજ નથી પડી કે બધાને બધી સમજ પડી ગઈ છે?
Students online બેસે બેસીને છે ને સર એ થઈ ગયા છે, rudimentary થઈ ગયા છે. They have stopped utilizing the opportunities which are there in front of them. But anyway, thank you so much, sir. It was always a wonderful pleasure to listen to you. And every time you bring something new and unique, so that is something which is very great on your part. Okay, I would like to invite Disha to present a vote of thanks, please.
Yes, ma'am. Now, when we are at the end of the session, on the behalf of S.R.Luthra Institute of Management, I, Disha Makwana, take this opportunity to propose formal vote of thanks. First of all, I would like to express my gratitude towards our honorable guest of the day, Mr. Siddharth Mandalaywala, sir, for taking out time for his busy schedule and enlightening our understanding and knowledge about art of the portfolio management. I would also like to thank our respected director, Dr. Chimi Kapadia, sir, for giving us chance to learn something more apart from the book. I would also like to present my gratitude towards our respected faculty, Dr. Delnaz Varia ma'am, for organizing this webinar and also encouraging us to be a part of the same. Last but not the least, I would also like to thank all my classmates for their active participation and cooperation. Thank you, Siddharth sir. Thank you, Delnaz ma'am. Thank you all. Have a good day.
Thank you. Okay, madam.
Thank you, Disha. Yes, thank you so much once again, Siddharth sir. Yeah.
Fine. કોઈને કઈ ડાઉટ હોય પછી બી કઈ પૂછવું હોય
Yes,
તો
please.
હા.
Yes, please.
એટલે see my email ID you can write siddharth@conceptinvestwell.com. siddharth@conceptinvestwell.com. So you can write me. Okay.
Okay, sir.
Thank you.
Thank you, sir. Bye-bye. Okay, students, you all can also leave the meet. Right. Thank you, everybody.